Oh wow, the inflation numbers are out. Is it good or bad for the markets? Let's find out. So you saw the headlines today, right? And the markets just shot up. What's really going on? The latest inflation report was a mixed bag. Headline inflation came in at 2.7%, a little better than expected. But the numbers that the Fed really watches, core and super core inflation, were actually hotter than we wanted to see. What's core inflation? It's basically inflation excluding food and energy prices, which are volatile. First, the market was bracing for a total disaster, so not as bad as we feared was seen as a win. And second, this okay data pushed the odds of a September rate cut to over 94% as per the Fed Watch tool by CME. But don't get too excited. What's driving this inflation? It's not the price of TVs or furniture, it's services. Service inflation is stickier than goods, and the major reason being, it is not affected too much by rising material costs or energy. They are more influenced by the labor market and other structural factors. Another thing to notice is with changes in immigration policy potentially reducing the labor supply and the participation rate. Wages could keep pushing higher, making those services even more expensive. So, the stock market is happy, the dollar is selling off, and gold has pulled back. But look at the bond market. The interest rates on short term government debt are falling, but the rates on long term debt are rising. What is that telling us? It's a sign that the market is worried about inflation sticking around long term. This could be a stagflation light scenario, where we get low growth but stubborn inflation. So while the stock market parties today, the bond market is hinting that the economic hangover could be real. Also, one other thing was most tariffs are seen by business as transitionary, and they are eating up those costs temporarily. Why? Because they are going to be challenged in the courts. And if court rules that these tariffs cannot be put into place by the administration, things could go back to normal. So, what are your thoughts on the CPI print today? Let me know in the comments below.